Thank you everyone for joining. I'm really excited. We've got a special guest, Jesse Chen, the CEO and co-founder of CoPilot. CoPilot has been a special company. Jesse and his co-founder Henry have been special friends of the VST family since, I think going back to 2015, 2016. I don't think many investors have had a chance to speak to Jesse or know much about the CoPilot story. It's an exciting company within our portfolio. Great team. They've been doing great things, and we thought it'd be good to share the CoPilot story with our investors. So without further ado, I will kick it off and hand over the reins to Jesse.
All right, thanks for the great intro, chat. Just let me share my screen here. All right, can you guys see my screen?
I can see it. Looks good for me. Can someone in the chat just maybe put their hands up or just let us know? Can you all see? Oh, perfect. Okay, awesome. Thank you.
All right, awesome. So yeah, just quickly introduce myself. My name is Jesse Chen. I'm the CEO and co-founder of CoPilot AI. I graduated from UBC with a degree in computer science, and I spent, about a decade in industries and military tech, fintech, as well as video games. I quit in 2016. I think you, Henry, before we met. But yeah, I just wanted to talk about CoPilot, or retrofitted, which represented Vancouver startup, at Boost, which talks about it, but it is actually a journey, and how to dive right in here. I'm going to start off with a quote from Marc Andreessen, where he defines product market fit, meaning being in a good market with a product that can satisfy the market.
Hey, Jesse, sorry. Jesse, sorry.
Let me talk about journey and how we eventually were able to find out.
Jesse, can you hear me? Sorry, I think you're I just got a couple of comments.
Yeah, I can hear you.
Choppy. Yeah, I think you're
okay, how is it now?
It's better now. Jesse? I think you're frozen.
Is it better now? I restarted my Wi-Fi. If it's still bad, I'll switch to tethering.
I think it's okay now. I can hear you correctly. Okay, I just got to note.
Way better.
Okay.
Okay. All right. I'll skip the intro of myself then, but to keep it brief, graduated from UBC, computer science degree, spent 8 years building video games, quit to work on this full time in late 2015. And I'm going to talk about how CoPilot AI found product market fit, but really this is the story of how, like the journey of CoPilot AI. And I'll start with a quote from Marc Andreessen, where he defines product market fit as being in a good market with a product that can satisfy that market. And so my journey started during the great financial crisis of 2008. I was actually laid off from my company at the time, and I used that as the opportunity for me to try to pursue something that was of my own interest. I ended up going to Electronic Arts to work on video games, work on FIFA, but at the same time, I partnered together with my co-founder, Henry B, to start a company. And so Henry's background was in business, whereas my background was in tech. So that's where we kind of came together to solve this problem that we identified during this financial crisis. So I'm sure you guys all remember back in 2008, a lot of the banks were bailed out, and generally those that were wealthy, they were protected from what happened in the market, but everyone else, a million people lost their homes. And so that was a problem that Henry and I felt like we needed to solve. And so what we wanted to do was to make social impact and help to bridge the gap between the wealthy and everyone else. So, So what that meant to us was, I don't know why I have, So what we called it at the time was kinder capitalism, whereas, we felt like we wanted success of companies to be able to give back to society, and we wanted to solve this disparity between the rich and the poor. And so the very first product that we built was actually a fintech product. We used AI to pre-configure portfolios by optimizing risk targets and then having it to target specific risk profiles. And we basically sold this to registered investment advisors. And we called this Watson for your money. So, back in the days, Watson was used on Jeopardy. And so everyone kind of knew AI and Watson. That was what the relationship was. And so when we came up with this, we flew down to California, to the Bay Area, where we met with Concert Wealth Management. We spoke to their CEO, and we actually managed to sign an agreement where we would sell this to their financial advisors. So that, to Henry and myself, that was like validation. We felt like, oh, we clearly made it, because we would now be able to sell this to over 1,000 financial advisors. And we were so wrong. Basically, the next 2 years was 2 years of product market misfit. We had a lot of feedback from the financial advisors. They complained that the portfolios weren't customizable. They complained that we weren't really competitive because this was new. Like a lot of AI, was still kind of new to the public kind of consciousness. And so nobody really thought that AI was better, or that the portfolios we built was actually better than what they already had. And finally, the distribution was quite slow. So because we were trying to do this by newsletter, by signing these advisors one at a time, it was really slow for us to do distribution, right? So basically, we weren't able to sell very many of our of these to financial advisors. So then we pivoted, and we basically said, why don't we take the models that we've built and let's build a SaaS product that we could sell to financial advisors, and it addresses all the previous problems, right? They wanted customizable portfolios. We have a tool where they can pick the different ETFs or different stocks that they want. They can even pick the different algorithms that they want in order to optimize the portfolios. In terms of not being competitive, we started offering things like client portals for their clients to view their account. And then finally, in terms of distribution, well, we're doing SaaS now. And this was a time where the SaaS playbook was starting to mature. Everyone's probably heard of T2D3, right? So we felt like this was the right approach to get fast distribution. So surely, we're going to succeed this time around, right? Wrong. So basically, another 2 years of pivoting. We just kept building what our prospects or our customers were telling us, right? They needed a way to show that their customers' risk profile, what it was like and whether or not it was currently what they had, as a way to be able to close the customer. We built a risk report. They wanted to go meet with customers to go over portfolio performance. We built performance reports. And then finally, they wanted to convert leads from websites, right? So we built a questionnaire widget for them to be able to for their website visit questionnaire to CoPilot's financial crisis of 2017. And this is where we nearly came to bankruptcy. And can you guys hear me?
Jesse, it's getting choppy again.
Okay, let me switch to.
Apologies all. I think Jesse's just switching to Tether. Sorry about that.
Okay, so I'm gonna just pick up from where we left off. But basically, what happened after just trying to do all these pivots, trying to basically satisfy all the requests that next time we should all just come to CoPilot's office. Yeah, so basically what happened after trying to satisfy all these customer requests, right? Because they were telling us why they weren't buying our product. Well, it basically led to CoPilot's financial crisis of 2017. This is where we basically ran out of money. And when Shaft swooped in and basically offered us a lifeline. I think the kind of hard work that CoPilot team has put through during the last few years had given Shaft confidence that we had a team that actually had the resilience to kind of keep pushing through despite all these pivots. And so with that lifeline from VST, we felt like we had enough to do one last pivot. right? And this is where we needed to take the learnings from all the previous pivots and figure out how can we be more successful this time around. And so the first thing we thought about was, how do we validate before building anything? It seems really obvious, but for us, it felt like that's what we were already doing. Because what is validation, right? It's actually a lot of times going out to the market, kind of doing market research and figuring out what the market actually wants. And what the market had been telling us was that, all the different things that I mentioned earlier, right? But basically, we found that at the end, clearly advisors, they just wanted more business, right? But the website widget, for example, it wasn't working. But why wasn't it working? It wasn't working because these are financial advisors. These aren't like, web optimization gurus, right? Basically, they had no traffic going to their website. And essentially, if there's no traffic going to the website, then nothing is going to convert with that widget. So basically, my co-founder at the time said, instead of trying to build all these different tools, why don't we just get them prospects, right? Let's use social prospecting to get them prospects. And my reaction to that was basically, you're telling me people are going to pay for social prospecting? Like, are you sure? Because as an engineer, for me, it felt like it was a pretty trivial problem to solve. And so I didn't think that people would pay for that. But nevertheless, the engineers, after having built through so many features and ultimately not getting any sort of success, we said, if we could get some validation first, that would be great, right? Enough of the wild goose chases and constant flip-flopping. So we had to redefine what validation meant for us. Basically, we're saying now it's not validated until people will pay to use it. Basically, show me the money, right? And this time, what that means is we need to validate by selling something that we don't actually have yet, right? We want to validate through sales. And if we can close, that means there's appetite for this. There's a need for what we're building. But then how do we sell this without a product, right? And so this is what CoPilot was able to do. What if I told you that you can validate without a product, that you can sell without an actual product? The first thing we did was we started with the pitch, which was to get 20 warm leads every month through social prospecting. And then the first thing we needed to do now was we needed to build a sales team. Because we went so close to bankruptcy, we actually had to let go of our previous salesperson. And so we actually didn't have a sales team at this point. And so the first thing we needed to do was to build a sales team, but we weren't just going to hire another salesperson to try to do validation. What we ended up doing was we outsourced. So we outsourced to a sales outsourced company in Toronto to set up the funnel. And then because we're selling social prospecting, we are using it ourselves to actually get the leads. So we were using social prospecting by prospecting on LinkedIn and to find the leads and then to point them to the Toronto sales team. And then within the first month, we had a 40% close rate and we hit 30,000 in MRR in the first month. To give you guys some sort of reference point, in the several years of CoPilot doing all the pivots, I think we only got to about 3,000 in monthly recurring revenue. So to 10x that in a single month for us told us that we had a product that actually had a need in the market, right? And so the initial reaction was, that worked? Okay, let's take this to the moon, right? So going back to product market fit, right now we have validation. Do we have product market fit? Let me remind everyone what Mark Andreessen was saying. We need to make sure that the product is able to satisfy the market. And in short, no, we couldn't satisfy the market because we didn't actually have a product, right? We were selling something we didn't have, and we were basically outsourcing. We were hiring people to sell these leads and using third-party tools, but these third-party tools were ineffective. And so we had difficulty delivering on our warm lead promises. We had 50% month-over-month churn. But that's okay, because at least we know that the market wants this product. So the first thing that we did was we built a minimum viable product in order to solve churn. The awesome thing about having validation first and selling first is you're hyper-focused on the problem that you're solving. We know exactly what we're selling. We're selling social prospecting to get warm leads. So that's exactly what we were going to build. And so because we were hyper-focused on that problem, it only took us a month to build an MVP. And that cut down churn from 50% down to 20%, which makes the growing of the revenue significantly easier, right? We're not losing half our customers every month. And then within the first year, we released version 2, which then cut our churn down to under 10%. So within the first 3 years, we actually grew 144 times, right? In 3 years, we went from 40,000 in annual recurring revenue to almost 6 million in annual recurring revenue by the end of 2020. And all of that was off of that lifeline that VST gave us back in the beginning of 2018. And this led to us winning the Business Pivot Award with the Canadian Business in terms of how we went from basically constantly finding product market misfit into growing to about 6 million in annual recurring revenue. And at this point, have we successfully found product market fit, right? Like we thought we did, but in reality, the answer is no. This is something that constantly needs to happen. Every company out there is actually constantly trying to continue to find product market fit. The market's constantly shifting. Your product may no longer satisfy the need, or that the need shifts, right? So that's constantly changing. So where is CoPilot AI today, right? CoPilot AI has the mission has shifted. We're no longer just offering warm leads. We're trying to innovate the way people grow their businesses by humanizing digital interactions at scale. So what does that mean as a product? What does that mean as a product vision? Well, what it means is that CoPilot is about quality, not quantity. I'm sure none of us appreciate receiving spam, right? But we understand that businesses have to do prospecting. They have to get business in order to grow. So how do you solve that without having to solve spam? And that's what CoPilot AI is trying to do. We're trying to do that using AI to solve this in a scalable way. And what does that mean as a product? That means that we want to use AI to solve the who. Who do you prospect, right? The when. When is the best time to prospect? Because prospecting timing is so important, right? And the what. What do you say in order to increase your conversion rate and the engagement quality? Finally, how. Like, do you send an email? Do you send an instant message? Do you use ads? What's the best way to do this prospecting? In short, what CoPilot AI does today is we make outbound prospecting easy with the help of our AI-powered sales tools, where we help you find the right leads. We use AI and different tools to make you more human, more engaging. And finally, we personalize your communication using our communication insights so that you can actually have more engaging conversations that's personalized to the person that you're trying to reach out to. In the long run, we're trying to be the Adobe of sales. We're trying to solve problems across the entire funnel with different AI products and services, starting from the top and all the way to conversion. So once a prospect becomes a customer, what are we trying to solve at that point? It's customer retention and customer expansion. So here are some examples of the products that we have today. This is our reply prediction. It is actually quite similar to Salesforce Einstein in that if you have a list, we'll let you know which one of the prospects within this list are more likely to respond. That way, we're getting closer to the not spamming people and only reaching out to those that are actually more likely to want to connect. Next is our communication insights. So this is what we use to predict what best communication style to use in order to have an engaging conversation with your target audience. Just for example here, I've got Shaft's LinkedIn profile set up, and I'm going to run our personalized insights on Shaft to see what it says. And then Shaft, you can tell me whether it's accurate or not. All right, Shaft, it says that your communication style is a socializer. And what that means is that you're energetic and friendly, you're a relationship builder, and you have a storytelling focus, right? So what does that mean? The key takeaways are, when I want to engage with you, I want to start with rapport building. I want to make sure that the atmosphere is energetic and interact with visuals and dialogue. I want to avoid low energy and too many details. Focus on discussions and relationship building. If I'm trying to send you messages, what template should I use? So this is our tool where we go, you can kind of say, hey, Shaft, thrilled to be connected. Loved your recent post on this topic. What's the most exciting project you're working on now, etc. And so if we use the full version at CoPilot, you can kind of pick down here what the messaging purpose is and get the best messaging template for it. So this is an example of how CoPilot builds products that help to increase engagement and to improve conversion rates. So now, sorry, just trying to find my
That's
mouse
awesome.
here.
I need to use that to get it in front of more investors.
Was that accurate for you?
It was. I think it was accurate. And I mean, that's a pretty cool tool to be able to use, before prospecting and reaching out. So no, that's awesome. I haven't used the new version, so that's really good that you showed me the demo.
Yeah, definitely it's on the Chrome extension store. Go download it, play around with it. Let us know whether or not it's working for you. But we also, whoops, this is the wrong slide. Give me 1 second here. All right, so what is that like? What do we do, for example, with this prediction model in terms of communication style? Well, we feed it into our LLM, right? So the rage right now is ChatGPT, Gemini, these type of LLMs, but these LLMs are not optimized for getting you higher conversion rates. Oh yeah, my name has changed. I don't know why it does that. I will change my name now, just so there's no confusion as to who is Shaf. A hint: it's the guy that isn't Chinese. All right. So because LLMs in general are optimized for language and not for conversion rates, it's not optimized for sales. It doesn't actually know what's the best way to convert. What we do is then we use our own proprietary models to feed in and to kind of enhance existing LLMs so that it gives you responses that are going to be optimized for higher conversion rates. And so in this case, you can use CoPilot, for example, to then handle certain, like, for example, objection handling, or if they are asking something in a way that you're not sure how to respond, you can use our smart reply in order to make a response. And then finally, this is our team today. We're now about 60 people in headcount. We've added a few new advisors to our group. We have Ken Stanek, the founder of Amazon Business, who's advising us on our enterprise upstream growth. And we have Dr. Stefano Ehrman, a professor of AI at the Stanford University. He's leading kind of our AI team at the moment. He is currently the fastest growing, I would say, in terms of referred papers of an AI professor. And then finally, we have Laird Kagan, who is the founder at CMCP and chair of YPO. So that's it. I mean, unless you guys want to find out more about the executive team and the board, I'll leave it to the Q&A now.
This is awesome, Jesse. Thank you so much. Yeah, I mean, I think we can go to the questions. There, I think there are a couple questions that have popped up. I'll ask those first, and I have a couple too that I'd like to ask. But what is the financial status cash run rate?
Yeah, sure. So as mentioned earlier, we actually are quite cash efficient. So we were running originally on that initial investment from VST back in 2018. But as of the end of 2022, we received a $5 million loan, interest-free loan from the government of Canada as part of the Innovate Canada program. So currently, we still have a lot of that cash left. We have about 24 months of runway left. We're currently at about 6.5 million ARR USD. Sorry, I've been reporting in USD lately because I've been talking with US investors. And we have about $4 million in the bank right now, with about another 900K coming in from Shred this year.
Awesome. Are you generating white label products for other companies, or are you laser focused on the single product?
A great question, Brendan. We actually do have a white label product. In fact, that's one of the segments that we're focusing on this year. In terms of our most successful customer, it is one of our direct competitors, but they're running on CoPilot. They launch ads saying how much better they are compared to us, but really they're just our white label customers. When they initially joined us, I think they only had 200 customers, and we helped them grow to more than 1,100 customers right now. So they almost generate as much revenue as we do because they charge a higher price.
Jesse, there's another question here. For your studies in computer science, did you get a master's or PhD? Did you study AI ML? Did you start, artificial intelligence, machine learning?
So I just studied computer science in general. I didn't get a master's. My mentality at the time was I wanted to graduate. I wanted to get into the industry and start learning and start specializing through experience. And so that kind of led my expertise more into system development while I was at EA. So no, I didn't get a master's or a PhD, and I didn't actually study in AI or machine learning. However, since 2008, when I partnered up with Henry when we were doing fintech, we did a lot of machine learning ourselves. So there's a lot of white paper studying, implementing ideas using R. I'm not sure if you guys have heard that. It's another platform to do data sort of like calculations and machine learning. So I spent, say, a good kind of 8 years doing that part-time together with Henry.
Awesome. So, Jesse, a couple questions I had. So, obviously, from a Victory Square perspective, we were fortunate, to kind of, have you guys within the launch ecosystem, and I just remember seeing you and Henry, there early, there late, on the weekends, and really loved your guys' work ethic and your ability to go through adversity. And from the slide deck, you've had a long journey, long road. What motivates you to keep going forward, and what is the end goal? So, from a VST perspective and our shareholders, I think they want to know, what is the win here for VST with Copilot? So where do you see this going? What's your end goal? What's your vision?
So what motivates me personally is kind of what I mentioned earlier. It's the social impact. I feel like I built a team of people here that share the same values, and I really want to see all of us succeed. And what does that success actually look like? Which is, I think, more what you're referring to in terms of the end goal. For us, that is some sort of exit, so that I feel like all the effort, the effort that the team has put in is rewarded. We do have a few different strategies towards that. One is to see if we can actually go public. We do have international expansion as one of our big strategies over the next 3 years. And if we're able to pull that off, I do think that we have a really good opportunity to go public. But on the flip side, though, if we're being realistic, I think right now there are a lot of big players in the AI space. AI is a space that requires a lot of investment of money. And so strategically, we're doing integrations into Salesforce, HubSpot, where we are able to interface with their data to provide additional AI sales intelligence in order to be able to help them with conversion rates to ultimately be a good acquisition target. We do have the trademark pending for the Copilot AI the Copilot AI trademark itself. We have the Copilot AI domain. And right now, given that everyone's just calling their AI Copilot, it is giving us a ton of traffic. And we do have some contacts that have dealt with Microsoft when it comes to trademarks. And that is something that Microsoft would probably be interested in as well. So there's a few things that we have that I think give us a lot of value as a company. But really, I feel strongly that as we progress, as Copilot is able to progress to the product vision, that we do have something that has a very huge potential here.
Thanks, Jesse. There's a question here. I think I'm gonna get an idea of what this question this person wants to ask. So there was a notice of some runway orders in China. Is this our future focus? How is that market? So I think this is referencing that Asian pipeline that you've kind of built up.
Yes. So the international expansion right now, as earlier, I think Brendan had a question regarding white label. So what the focus with white label currently is really towards marketing agencies and resellers. And what we've been able to do is set up new resellers in new territories like Norway, Sweden, and Hong Kong. And so the kind of focus that we have for Asia right now is really to find marketing agencies in Southeast Asia and in China that are servicing clients that want to sell into North America and into Europe and into Southeast Asia. So one of the biggest issues, obviously, right now with the Chinese market is the way they do prospecting is very different in China, and we don't plan on going in there using the existing product because that doesn't really work. But what we do want to do is actually provide it to marketing agencies that already offer prospecting services to their clients inside China. I've already met with a few marketing agencies in China where they buy, for example, Dun & Bradstreet data in order to get prospect info to give to their clients. So this is actually a good fit for us because they have the need and we're able to service that. In terms of Southeast Asia, as we all know right now, with the decoupling that's kind of happening between the US and China, there's a lot of demand right now in the US to be able to find the suppliers in Southeast Asia, and then vice versa, suppliers in Southeast Asia looking for buyers in North America. So there is that need from a prospecting perspective as well. Same with the companies in China, they're looking to prospect into Southeast Asia.
No, that makes sense. Another question here, which I think, is coming around. It says, it sounds like CoPilot is all cashed up. So why are they doing a financing round, and when do they expect to close this round? I think, just one note before you answer that, I know that that for you guys, there's always that ear to the ground, and I remember last year there was a number of investors kind of circling, but that question is right. You guys are cashed up, and what are your thoughts on financing, on the financing round?
So because we're seeing traction right now on these international areas, the US is actually quite competitive. It's a very saturated market. There's a lot of competitors. And so there is a lot of opportunity right now internationally. We don't intend on investing our current runway into that significantly. And so we want to be able to raise so that we can actually double down on our growth, one in the international expansion, but also the reason why we've kind of started to turn things around this year is that we've been successful in terms of bringing down our customer acquisition cost, and having a pretty efficient inbound funnel right now, which we are investing in. However, kind of to CoPilot's DNA, we've been very sort of cash efficient, where we don't intend to overspend. We follow really closely with things like the rule of 40, so that we're making sure that we're able to generate a good ROI from our investments. And so from the perspective of cashed up, yes, we do have a lot of cash right now. However, a lot of that is part of the $5 million loan that we do have to start paying back starting next year, even though it's interest free. So we want to make sure that we leave ourselves enough runway right now in order to continue to grow and continue to hit our growth targets, but being able to raise gives us additional options in order from an acceleration perspective.
Thanks, Jesse. What could go wrong? What keeps you up at night? What are things that concern you about the sector and space?
I think that in a startup, the market's always shifting. I think with a lot of players now entering the market, I think competition is kind of fierce right now. There is a lot of, that's also the other reason why we're raising, because a lot of our competitors that are coming in fresh, they don't have a product yet, but they are raising, and they're raising significant amounts of money because they're coming in as an AI company. And so if we don't have the capital to reinvest into R&D and to reinvest into staying ahead or being, first to market at these new markets, then I do think that that is a risk for us as a company, right? Where someone who is more well-funded is able to get more established faster than we are. So far, we've been able to survive kind of the previous competitors. When we first did the pivot, there was really nobody that was competing against us, except for some extensions on Chrome. But now there's a lot, but in a few years ago, there was even more. And a lot of them have died because they haven't been able to keep up with the competition. We, at a very early stage, position ourselves as an AI company. We position ourselves as a quality company, whereas everyone else focused on quantity. And that's how we've been able to differentiate ourselves. But with AI being much more pervasive now, it is an area where, if we're not able to stay ahead, if we're not able to embrace this sort of the AI use of AI, and even in everyday processes, we do run the risk of having other people catch up and go past us.
Jesse, do you see M&A opportunities? I know in the past you guys have identified, are there ways to grow by acquiring complementary, let's say, features or services, or companies within your category, given that you mentioned there are a lot of players that have entered into that space? Do you see M&A opportunities?
Yeah, I do see a lot of M&A opportunities. The way I see it is that we have this product vision that we don't necessarily need to get there through our own personal development, like in terms of developing everything in-house. What we're good at is identifying where there's sort of this market need and a way to be able to monetize that need. And so there are a lot of, I would say, AI companies out there that have great tech, but not necessarily product market fit or the ability to go to market or to, turn that into some revenue. Whereas for us, because we're hyper focused on what it is that we're trying to do, we're able to go out there and look at what's available to be able to kind of incorporate into our product. Some examples are right now, there are a lot of deep fake companies out there that are able to generate videos, short videos off of just a very short clip, and deep fakes your voice, deep fakes the animation of your face. And for us, that's an important part of personalization, right? So if we can, instead of building that ourselves, we can either do partnerships, collaboration, or full-on acquisitions for companies that already have some existing, for example, revenue and customers, and then it's a good fit with our outbound approach.
I've got to connect you with one of our portfolio companies that's doing that. I think most of the investors have seen the AI clone of myself that Jeff and Jonathan at VRAI have done. So there could be some, I got to make sure I put you guys in touch. There could be some opportunities there. Last question, Jesse, you mentioned 900 grand coming in from Shred. I think we have US and Canadian investors on this call. What are some of the benefits for building in Canada? Like when you talk about Shred and some of these tax credits and the loan, the $5 million no interest loan.
Yeah, so I would say the federal government has always been really good in terms of providing these subsidies. Shred is a subsidy that I think it's about a 40% reimbursement of any R&D development that is eligible for Shred. The key here is the eligible part. I think initially when we were originally doing fintech, we had difficulty getting approved for being eligible because they treated anything financial related as non-R&D, non-scientific R&D. And so the SRED is scientific research experimental development. And so that was a little bit iffy for us, but now given that we have a pretty sizable engineering team, and given tech companies spend up to 40% of all their expenses on R&D, a lot of that can be Shred eligible, and so we're able to get a lot of that back, and it helps extend our runway, which is really important as a startup.
Yeah, and again, it's non-dilutive, which is amazing.
Exactly.
As well. There's one more question that just popped up. Sorry. VRAI, you spoke of a beta testing program of a famous person's family, but yeah, that is one that I'll let VRAI communicate. But yeah, the VRAI team has been working on some legacy videos, and I think they'll announce that kind of on their own. But yeah, there's some interesting things coming out of there. There's one question here. How was the experience of working with Shafin and VST? Besides the financial help, did your relationship with him help in any other way?
Yeah, so when we actually first hit, so the trip or the journey from getting to $1 million ARR to the 6 million or the 5 million ARR later wasn't like a straight line thing. It was more like this, right? And so I remember there were several times where we ended up having growth hacking sessions. We ended up having strategic sessions with Shaft's team at the VST office. With Vahid, for example, where working together with sort of my department heads in terms of strategizing, in terms of what are the levers that we can pull to be able to get our sales funnel more efficient. When we actually had the crisis in 2021, where Facebook where iOS changed their privacy policy, our cost of acquisition went up quite a bit because it made our targeting a lot weaker. And so that was another session that we spent with VST, just trying to figure out how we would solve that, right? So there's a lot of expertise and experience on the team to help. The other part of it was just getting another perspective on funding and whether or not we would go public or we would go towards private, etc. So having a more well-rounded understanding, it was really helpful for our decision making.
Jesse, thank you so much. Really, I know you're slammed and busy, so really appreciate you taking the time to share the CoPilot story with us. And for everyone that tuned in, thank you for your time. I apologize we had to reschedule it this week, but for everyone that jumped in, thank you so much. Jesse, how can people connect with you if they have any follow-up questions?
Connect with me on LinkedIn or send me an email. I'll type my email out here. so that everyone can see. It should be, you know, the website's also copilotai.com, so everyone can go and check it out there. Yeah, I'm happy to grab a coffee with anyone who's local or hop on a Zoom call with anyone that wants to have a quick chat.
Amazing. Thank you, everybody.